What's up, everybody? Nate here. So the housing market is in shambles right now in the United States, mainly because of the most recent FOMC meeting from the Federal Reserve, where they announced they were going to start raising their interest rates, which directly affects the housing market. So today I kind of want to go over everything that's going on and this potential housing market reset that a lot of experts and investors believe that we are going to see in 2022, and of course exactly what all of that is being caused by and how all of this is going to affect our economy and the housing market in the future. Oh, before I forget, if you like this video, be sure to hit that sub button below and ring the bell. That way YouTube shows my videos to way more people all throughout YouTube, and of course I can keep making videos just like this one. Thank you so much for doing that. Now the first thing I want to talk about is Jerome Powell and the Federal Reserve and the impact they're having on the housing market. Like I said, the Federal Reserve right now actually wants to reset the entire housing market. So what they essentially want to do is eliminate a lot of the demand in the housing market by raising their interest rates. And they have raised their interest rates super aggressively in order to eliminate that demand, but also to get inflation down in our economy. At their most recent FOMC meeting just a few days ago in June 2022, they basically raised their benchmark interest rates by the most that we have ever seen since 1994. It was a 0.75% interest rate hike. So the federal funds rate in the United States currently sits at around 1.5 to 1.75, and that also affects interest rates for 30-year fixed mortgages and of course interest rates for everything. So we are starting to see the interest rates in the United States get way higher basically overnight. Interest rates right now sit at around 6% to just over 6% on average all throughout the country. That basically means that 18 million Americans are now suddenly unable to afford a home and are basically priced out of the market altogether. You got to remember, these financial institutions determine if someone can afford a mortgage based on the monthly payment. So the interest rate has a huge impact over what you can pay every single month. And it also means that anybody currently buying a home is going to pay hundreds of thousands of dollars more just because the interest rate is higher. It is becoming a whole lot riskier for everyone to get a home, and like I said, the fact of the matter is many Americans just simply can't afford one right now. Now this is completely designed by the Federal Reserve and Federal Reserve Chairman Jerome Powell, because he said that Americans need a bit of a rest from the housing market and all of the craziness that is going on right now. He also said though that basically what the Federal Reserve can do is very limited in the housing market. Now, when we say the housing market has gotten crazy, we talk about that in terms of price and super high demand. The reason that we've had super high demand is mainly because of the Federal Reserve and the United States federal government from 2020 to 2021. They were offering thousands of dollars in stimulus and also extremely low interest rates so that our entire economy wouldn't fall because of the pandemic. Now in 2022, those interest rates are going up, but Powell is not convinced that just raising interest rates is going to completely lower home prices in the United States back to an affordable level. He believes that home prices will end up going down in 2022 or in 2023, but that we have still really high demand and inventory just is not catching up. The big thing that we can talk about when it comes to a housing market crash, correction, or a boom or a bust is supply and demand. Where is supply and demand in your market? If demand is really high in a market, well, then you're going to have a situation where supply is also probably going to be really low because you have millions of Americans who want that particular thing. And that is exactly what we're starting to see in the housing market. Housing market inventory is super low, and it's really difficult because of inflation and some other factors to build new homes right now. So if Americans are not putting a whole lot of houses on the market and new homes aren't being built, then restricting Americans that want to buy homes is not really going to create the solution that the Federal Reserve or the United States federal government is looking for right now. All it's going to do is restrict the current home buyers into the houses they can buy. Even though we are starting to see home buyer demand go way down because interest rates are going way up, well, inventory is not increasing at the same rate. So you have a situation where demand is coming down, but supply supply is not really growing. So demand is always going to be exceeding your supply, meaning we can't really have a housing market crash or a correction or an equilibrium where prices basically stay stable until that happens. Now, the last thing I want to mention when it comes to the Federal Reserve and their effect on the housing market is Federal Reserve Chairman Jerome Powell's expectations for interest rates in the future. The Fed is trying to get inflation down as fast as possible right now, and they just told Congress that they will do anything and everything in their power to do so. That means raising interest rates aggressively, possibly by 3/4 of a percentage point to a full percentage point in July or during their next FOMC meeting. But what that also means is the housing market is going to get restricted in the meantime. But Federal Reserve Chairman Jerome Powell wants to kind of keep this very controlled. He doesn't want to raise interest rates forever so that the housing market crashes and no demand is left. I mean, eventually, if you raise interest rates high enough, there simply won't be any buyers in the market. Fed does not want this to necessarily happen. They want to raise interest rates enough and then kind of see where our economy and the housing market is, and then potentially, and yes, he said this, bring them back down. Powell wants to potentially bring down interest rates once we hit a certain plateau so that more demand and more buyers can enter the market. But he wants everything to get reset. What I mean by that reset and what the Fed means is that supply really starts driving the housing market once again, and demand really starts coming down. And you're going to continue to see that as the Fed raises interest rates and more buyer demand eventually evaporates in the housing market. The second thing that I want to mention about the housing market is all about home buyers and current home owners. So we have talked a lot about inflation on this channel and how that is going to affect the housing market. Obviously, inflation means that the price of goods and services is going up, and that actually adds to the housing market, and the values of the housing market are pretty much overinflated in just about every market in the United States. They are starting to come down, and we probably are going to see them come down throughout 2022 and 2023, but not by a whole lot. Maybe back to normal, where they should have been growing at a normal pace from 2019 to 2020. But inflation has a lot of other hidden effects that affect the housing market in a lot of different ways. The first and foremost is taxes and insurance going up every single year. Your taxes are going to go up based on your property taxes and the current value of your home. Those are probably going to rise because all of the other homes in your area and your home is probably going to cost a whole lot more and be valued at more. So there's a lot more taxes for that. And then of course insurance goes up because as the value of your home rises, well, then you need to insure more home. We've talked a lot about that on this channel, about how that could potentially cause a foreclosure crisis, as millions of Americans who bought over the last few years now are not making enough money to afford their home. Wages are not going up either, so Americans have to pay more in taxes and insurance on top of their mortgage payment. That can get very expensive depending on how this inflation crisis continues. But the other really important thing to note here is that many Americans are not doing as much to their home right now because of things like inflation. A recent poll from CNBC showed that around 43% of Americans are foregoing home improvements because, well, things just cost way too much right now. They're not going to Lowe's and Home Depot to buy all of those products to make improvements on their home, like home renovations, because everything costs so much and prices are continuing to go up. And again, wages are not rising nearly fast enough. Now, this can be a huge problem for many Americans because of emergencies. Obviously, when we talk about home improvements, there are two different types. You can improve your home for things that you want to do, like cosmetic changes, things that don't technically really matter for the living of the home, and things that you have to do, like replacing windows and doors and an AC or a furnace unit. I mean, I guess you don't technically have to do those things, but eventually you're going to need to, like maybe even replacing the roof. I mean, you can't live in a house or try and sell it if you're going to have a lot of those structural problems to your home. Many Americans, though, can't afford these things right now, so they're foregoing them. They're not going through and making those changes today, which could be a problem in the future. If Americans don't make those changes right now, well, things are only getting more expensive. And we hope that wages start to go up even more, but if they start to stagnate, well, that could also be a problem. And that is what could potentially happen if we run into a recession in 2022. A lot of businesses are having troubles, and major layoffs could be coming all throughout the United States, which means people are not going to be making money at all, making it even harder for them to make all of those home improvements. But the fact of the matter is, if those home improvements don't get done, well, now you might be running into a situation where the roof caves in, or you have problems with the structural integrity of your home. Then you are sort of forced into making a lot of those improvements, or selling your house, or going further into debt, which is a huge problem as things cost more and we have a potential recession around the corner. Like I said, that could improve because inflation could go down in the United States over the next couple of years, and it could also improve as people start to make more all throughout the country to be able to afford a lot of those things. But the fact of the matter is, it's not getting done right now. The third and final thing I want to mention about the housing market is we are starting to see layoffs in the housing market industry. So real estate firms Redfin and Compass are laying off a huge portion of their workforce as more and more Americans are less likely to get a mortgage. These companies rely on people going to them in order to finance a home, but with fewer people financing, well, they don't have the resources to pay all of their current employees. This is a systemic problem all throughout Wall Street and all throughout the United States. We are starting to see a ton of companies fire employees and lay them off because they just don't have the money anymore to pay all of them. In 2020 and in 2021, businesses needed employees. They needed a lot of people in order to make their goods and services. But now we're running into an issue where businesses have too many employees. Now, this was fine in 2021 when there was a ton of stimulus. There was a ton of liquidity on the stock market and inflation hadn't hit everybody so hard just yet. But now everything is getting out of place because inflation is so high, there's no liquidity and businesses have no extra money. They have to eliminate a portion of their workforce. And as we start to see more layoffs in the housing market, well, that is going to show us what is going to happen in the future. Simply put, all of these real estate agents and real estate firms sell homes. And for the vast majority of Americans, we don't have hundreds of thousands of dollars lying around in order to put down on a home. So the home buyers that can currently afford a home might even have to pay more simply because there's not that many firms out there, and these firms can set their interest rates basically at whatever they want. There is zero competition if all of these firms start going out of business. Not only that, but it's going to be harder for Americans to buy a home because they don't have that connection with a real estate agent. If real estate agents all throughout the country are not making any money being a realtor, well, then they're going to have to switch careers. They're not going to be a real estate agent in 2022 because there's no money in it and there's not enough people in order to justify the amount that you're making. Obviously, all of this is going to depend on particular markets in the United States. I will say there are some markets in the United States starting to come down. There are other markets starting to go up. It really just depends on where the money is at and who the buyers are in particular markets. But one thing is super clear. The housing market in the United States is starting to cool down, and if the Federal Reserve has their say, well, then the entire housing market could essentially get reset. We could see demand fall and continue to fall throughout 2022, giving inventory enough time to finally catch up. Everything will eventually hit an equilibrium, but this is going to take a very long time. One thing I will say about the housing market right now is this could potentially be a good thing for current home buyers, the ones that can afford the interest rates right now and the ones that have a sizable down payment and the affordability factor. So those Americans might actually benefit from these prices slightly decreasing in the United States. Like I said, they're not going to go down a whole lot, but prices will remain stable as people continue to buy homes. And as far as an entire crash in the housing market, well, that is going to depend on two major factors. One is the Federal Reserve and the other is mortgage lenders. If both of those essentially are overcompensating right now for inflation and home buyer demand, well, then we could potentially see a housing market crash because the Fed and these financial institutions are raising their rates way too aggressively. They want to do whatever they can. They want to now try to be proactive so that they can make their money and potentially restrict demand as much as possible so we don't have rising inflation. But we could see rates come back down if the Fed and financial institutions realize that they did way too much later on in the year or in 2023. But all of this does signal that the housing market boom in the United States is over. We are not going to continue to see extremely valuable homes in 2022 or in 2023. We are going to see inventories start to rise and demand start to come down. But now I want to hear from you on this issue. So what do you think is going on in the housing market? Do you think the Federal Reserve and these financial institutions are going to be able to reset the entire market based on their monetary policies? Or do you think that the housing market is headed for a complete crash? Or do you think the opposite is going to happen? The housing market is going to continue to explode and boom in 2022, and there's really nothing that the Federal Reserve or any financial institution can do about it. Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.